So this is something that you're really going to want to pay attention to. We're looking at the numbers. All of us are trying to figure out, with interest rates going up, house prices where they are, what's going to happen next, especially in trying to talk to our clients. So just a few minutes here. I want to show you a couple of charts. The best thing we can do is look at history. We try to pay attention to the different factors that are in front of us at this time. We want to look back historically. So some people may not be aware that there was a very, very difficult time in housing in the early 1980s, from the end of the 70s into the 1980s. And in 1982, I've recently put out a note that like if you wanted a 30-year fixed mortgage and you were well qualified, the interest rate was 16 to 17%. FHA loans at that point were somewhere around 20 to 23%. That was the interest rate. That was the real interest rate. So obviously you would think, well, no one's buying houses. That's going to just totally basically hit pause on home sales. So let's take a look. What happened? Now I'm going to switch my screen here and show you what did happen. Okay, so you're looking at, this is from a reputable source here, DQYDG. DJ, you can look this up. Now this says historical median home values. Okay. And let's take a look here. So in 1982, interest rates for a 30-year fixed mortgage was about 16 to 17% for a well-qualified client. And that was way up. They brought the interest rates way up and influenced the interest rates to go way up. And why did they do that? Inflation. Inflation was out of control in the late 70s, going into the early 80s. The Reagan administration came in during that time, and we're trying to make change. Well, the governmental associations that manage monetary policy felt that they needed to raise interest rates, and that was the rates that we're talking about today, the federal funds rate, and they started pushing rates up very high. We're talking, like I say, a 30-year fixed mortgage at 16 to 17%. So, obviously no houses sold, right? There's nobody that would buy a house at 16, 17, 22% interest. Well, guess what? People did. So what does that look like for us? So let's take a look at this chart here. Median home prices. Now, this is the questions. The two questions is, are they going to buy any homes? And second question is, how much are they going to pay for them? How much are they going to be willing to pay? All right. So let's take a look here. Now we want to look at the blue line because these are all inflation adjustments. We're not looking at the inflation adjustments. We're looking at raw numbers. So this is, you see the median home price. It says they're in blue, the national service areas. So let's take a look at 1982. 1982 home prices, 61, 62, 62, 62, 63, all through 1982, home prices remained steady. Okay, they would remain steady. Whether that is exactly what's going to happen this time, of course, we'll have to wait and see. But look at the fact that home prices remain steady. This is also, this gray line indicates a recession. So a recession of the overall economy, but home prices remained pretty steady. Let me get this out of your way here, those boxes. And you can see that here's our 2006-7 crash, right, that came through, primarily probably caused, if you look at this, by some of the loose lending that was going on, and then which ended up with massive over inventory at one point, actually, because most of the homes were beginning to be, too many homes were owned by investors that could buy investment properties with basically nothing. So moving along, we started to come down here. This is probably 2000. Yeah, 2010. I always said 2010 was really the bottom. This is saying the bottom was more of 2012, somewhere in this range. And then here's our rise to where we are here today. So the other thing I want to look at is a trend line. So if you were to have a straight line crossing and moving up, trend lines matter because that has to do with kind of what is the consistent increase in home prices. And you can see we would probably be somewhere in this range, so we might be a little bit higher on home prices. However, inflation is through the roof. So that is also means that the incomes are way up as well. There's places where you've got minimum wage now at $15 an hour. Minimum wage in 1982. I'd have to go look that up. That'd definitely be interesting to look up. So second question is, in 1982, Did anybody buy any houses? I mean, who would buy a house at 16, 17%? And I looked it up on another chart here that I don't think I have up. Let me see here. No, I don't have up, but I can tell you this: 2 million homes were sold in 1982. 2 million homes. Is that as many as 1981? No, it was down. The number of home sales was down, but there was still 2 million homes that sold in 1982. I mean, again, that was way back. Now that number realistically today might be 6 million to kind of have that equivalent as far as the population growth, 4 or 6 million. So you've got a chart showing that millions and millions and millions of homes were sold when interest rates were 16, 17, 20, 22%. And the prices of homes, I was surprised by this, basically remained steady through this time. Did it slow it down a little bit? Yeah, a little bit. But don't think because interest rates are up that house prices have to come down. Because if you look at the historic charts, that's not always what we saw. Now, even during this time when house prices in 2006, 7, remember, was it high interest rates that brought the market crashing down? No, it wasn't. Okay, there was other factors, but it wasn't that they just jacked up interest rates and brought the markets crashing down. So this is really good data for you to know that we still might be this might be a great time to continue to purchase property. Home prices don't have to come down, and millions and millions and millions of homes will be sold in 2022 and 2023. We just need to get out there and make sure that we get in front of as many people as possible and keep moving forward, because the demand is insane. I can't imagine what the demand was back here. It surely isn't what it is today. We are currently 4 million houses short of having enough homes for the people that want to buy homes today. And builders cannot build 4 million homes. They usually build somewhere between 1.2, 1.3 million houses in a good market, in a good time. And right now they're having supply chain issues, or having employment issues, or having a hard time finding workers. They're having a hard time getting through the cities. They're having a hard time getting through environmental studies. It's difficult to build a home right now. So again, inventory is tight. It's hard to get a hold of these houses. Houses are moving quickly. There's still transactions happening. It's just that this inventory isn't sitting on the shelf for as long as it usually does. So, get out there, let's sell some houses, and let me know if I can help with some financing. Have a great day.